Yeah, I think we have a real problem with the markets. I've been saying that, Steve. I've been saying that for about a couple of years now. In articles and whatever. I keep things pretty well hedged, but I have a very big hedge on now. I think we have a major problem, and I can go into it more if you want me to. I mean, to begin with, we're trapped with this inflation. Inflation is a terrible thing. It's what brings down hegemonies. And you look at things simplistically. I look at it just very simplistically. That's where, if you can do that and sort of understand the markets that way, you should be successful over a long period of time. And right now, there are real problems because inflation is a terrible thing. And once you have it, it's almost like being drug dependent, and it's very hard to get rid of it once it starts. I mean, I remember the 70s, but it takes down countries, it takes down hegemonies. And I think Powell is very right to do anything he can to stop this inflation that's coming on. And the real surprising thing is that you haven't had it before, because for the last years, we've been just printing up money and just giving it out. And one of the major problems is, I think, and nobody's blamed them, but it's corporate America. It's the CEOs, rubber stamp boards, and the money has been very cheap. So they've been able to borrow money very cheaply. But instead of putting it back into production, they've taken that money, borrowed more and more, and bought stocks at very high valuations. And now it's time to pay the price of that. So you'll have more and more debt coming due or interest rates to pay at higher prices. And that is a problem as far as earnings are concerned. And aside from that, household net worth, I would say median household net worth is really non-existent in this country. So half the households have no net worth. And the other half, except for the very top 10%, I think are very concerned about what's happening. And they're looking at their net worth, which is the market and their homes. And you have to be very concerned about that. Yeah. Well, we're very hedged. And as far as I'm concerned, short the S&P and short different companies. And what I look for are companies that have some hidden jewel. And that served our purposes. We find a company with hidden jewels that are either not well managed or the boards are rubber stamping too much debt or whatever. And we get it on those boards. And eventually, sometimes you have to replace the CEO. And a lot of these companies are doing well. So you take CVI, our refinery. Our refinery, I mean, it took years, but it's now actually functioning greatly because we have spent quite a bit of capital in it over the years. We had to save it for going bankrupt. The government, in their great wisdom, with ESG, made refineries very difficult to make a profit. So a large number of small refineries went out of business. And I won't go into the details, but they penalize refineries and they tell them they don't want them. So unlike almost in any other industry where if you're doing well, you build more. If you're doing well in the widget business, you build more widget factories. You can't build another refinery. You take CVI, for instance. The refineries we have to replace would be, $10-12 billion, I believe. You can't put a number on it because you really can't build another one in this country. So You can't have that competitive element coming in. A lot of refineries went out of business. A lot of the large refineries, or the big companies, listened to the government telling you how terrible refineries were and stopped building them up. So today, what they call the crack spread has widened tremendously. The diesel crack, for instance, has gone up as high as $75 or $80, and that just means it used to be, $20, $25. So obviously, our EBITDA has, for 3 quarters, has gone up to $800 million, I believe, or close to $1 billion. But then you can't really come in and say, well, these refineries, should pay more taxes or something, because in the bad times, I must have put $300-400 million in to save that refinery or that 2 refineries when a lot of refineries went out of business. So now you're backed into an energy problem for gasoline and diesel. And diesel is very important today. Diesel now is used in Europe to generate electricity, which will stop eventually. And from the point of view of ESG, you have something called bunker fuel that is really, really polluting the water as we speak. So diesel is used to replace that terrible fuel they used. And then our refinery, Wynnewood and Coffeyville, the 2 refineries, we're able to produce fertilizer or help to produce fertilizer. So we don't need, with fertilizer, you need ammonia. You need gas to make the ammonia, NH3. You need natural gas, except we're the only one in the country, and people don't understand this, that built this many years ago. We had the foresight to build it. I can't take credit for it, but it's there. And we were able to make it with something called petcoke. And so we don't need the natural gas to make the fertilizer. And we ended up owning a fertilizer plant, which is, the factory is right next to our refinery. And it's really fascinating. And nobody even wanted that 7-8 years ago, but we nourished it and we kept it going. We own 36% of it, and we own the control of it. And obviously today, fertilizer is the most necessary thing in the world if you think about it, especially if the Ukraine keeps going and they shut off these things. And we are the only one in the country that can make it without natural gas. So, we have all these little jewels at CVI. I'm just using one example. When I was in college as a freshman, I didn't know much about the market at all. I was always a little intrigued by it. I went out, I just was thinking back on this, and it really happened. I got into Princeton, and I came from middle-class background from a sort of bad high school. But I made friends with a couple of the wealthier guys, and as a freshman. And one of them invited me to dinner with his father. His father came up to see him, and his father was a big deal on Wall Street, sort of very well thought of, really very respected. And we were sitting there, and he looked at me and said, you have some promise, business, because I asked him a couple of questions about, Wall Street a little bit. And he says, one thing I'm going to give you, one bit of advice. Just remember this. Hey, remember this, kid. He was a nice guy. Remember this, kid. If you ever get into Wall Street and this business, follow one rule. And I'm not joking. This is what he said. Never fight the Fed. And I've learned that. So I will tell them, my advice is, this Fed and Powell, I listen to him. And he's a serious guy. And he's going to be, there's none of this stuff, all these guys are saying, oh, they're going to pivot and they should pivot and this and that. And, these guys that tell you that a lot of them are telling you that because they put all these people into these companies that are overpriced. And there are many good companies now, but many overpriced ones. And I am happy that Powell really means business. And I really think he does, because you must get rid of this inflation. And that's the worst thing an economy can have. And I think he means business. And I really respected him for coming out and saying it. And I hope I'm right. And I think there's going to be, look, I've said it a few times. I think it's going to get a lot worse before it gets better, perhaps. But all these people that are telling you should pivot, you know what it is? It's like telling a drug addict. Let's say your kid's a drug addict and telling him, okay, you took enough, you stopped drinking enough now. Okay, go have a good time again. Well, you can't do that, right? You have to get rid of the goddamn problem you got. And that's what we need to do here. And don't fool yourself. There's going to be a lot more headaches, I think, before we get out of this mess we're in, because you can't have the Fed, even if they want to. Over the last 20 or 30 years, the Fed was able to come in and save you and save the market, or they go into this taper tantrum. But they can't do it now, because right now, even if they wanted to, you can't keep printing up money because it's going to just throw gasoline on the flames of inflation. So I think this is what you got to understand. However, there's some very good companies out there, and and if you're willing to buy them and have the patience, I think you'll look back at 5 years or something, or less than 4 years, and see that they were great buys. But right now, I think they're very far and few between.